right, this is Jeff Mackey live. I'm Spencer. That's Jeff Mackey. Jeff,
And
how's it
that's
going?
Spencer. It's going well, man. How you doing?
Excellent, excellent. Uh, we got a lot to talk about on the show today. We have a lot to get to, so let's jump right into it. We have to talk about, as always, there are comings and goings and developments in your neck of the woods. We'll talk about the headlines and the implications for consumer stocks. We'll talk about earnings that just happened, earnings that are coming up. I do want to talk about your report that you put out late last week, kind of about your I guess your favorite stocks for Christmas.
Yeah.
And then I was hoping we could end with a little bit of maybe you can give us some tips on how to shop like an investor, shop with the eye of an investor. Sound good?
It sounds perfect, my man. It's
All right.
literally what I do for a living. This is my favorite time of year, as is known far and wide. So, yeah, let's dig into it, man. Let's go.
All right. So obviously the big news we've been talking about in the past few weeks, the consumer. Some consumers are stretched, others are not. What are the implications of a shutdown? We talked about how the shutdown could be affecting some companies 2 weeks back. It appears now the shutdown is going to end. At least we have the finish line in our sights. So, what does this mean for consumer and retail companies?
Last week was the part of every holiday movie where the little kid doesn't believe. It doesn't believe in be it, doesn't believe in family, doesn't believe in Hanukkah, doesn't believe in Christmas, just doesn't believe. And it's
Yeah.
sad. And we all cried a little bit. We wept a little bit. Things look dark. And now we're getting to that point where the music's swelling, and maybe we've bottomed. Maybe wiser minds are going to prevail. Maybe the holiday spirit's going to emerge. It's the shutdown apparently is over. I don't know why we're dragging it on. I don't know. DC, they always love a hot mic, even when it makes them look like asses to keep talking. It's like, just why don't we pay the government and then we could have planes that don't crash into each other? That would make sense, and it would obviate the need for all these trees. But it seems to be done. The CEO from Delta was out today. He's saying that we can get the airlines back on track before Thanksgiving, which is huge. The tariffs are going to be outlawed by the Supreme Court. Also huge. And so you're seeing the president kind of back off those a little bit. Both those are really bullish for the consumer. Is it too late? I don't know. There's a reason that you have that third act of the Christmas movies, and that's because maybe Santa won't show up anyway. Maybe those roadblocks, maybe those obstacles, maybe Elf isn't going to win this time around. And so we stick around and we watch. Now, I think Elf is going to win. I think it's going to end the same way, but we'll see. We know for a fact that once they started slowing down flights and it started hitting corporate America, people stopped flying because that's what people do. No one wants to sit in an airport. And so they lost their corporate business. They lost the family business. That has to come back. It has to come back in a hurry. It's either just in time or one of the great unforced errors in the entire history of the holidays in the American economy. But we'll see. So far the signs are actually pretty good. We can get into the earnings that we've seen so far, the kind of teasers, a couple absolutely monster rallies. And so it looks like, at least at the high end and certain niche companies, we're seeing some beats, which is a lot better than the price action and kind of news that we heard last week.
Yeah, I think maybe the thought of disrupted air travel heading into the busiest time of the year for air travel, that was scary. But
That was. There's a famous old scene: George Brett storming out of the dugout, just rage, just absolute. People started having conniption fits. You reduce the flights in and out of O'Hare by 15%. And you got a lot of people sitting around in airports getting real surly and kind of sending off awful, mean little text messages. Those people tend to donate in large size. So it was one thing to tick off all the food stamp folks. It's another thing to tick off corporate America. But you get both of them mad at you. Not even the government wants that business going on.
all right, let's move on. Let's talk about some huge beats. This is one of your favorites. We talk about this every quarter. This
Every
company
quarter.
seems to not just beat, but the stock just rockets off these reports, and then it gives it all back. But at least for now, it's holding up.
I was long earlier this year. They gave me the most graceful exit. I suspect people are going to be looking for that this time around as well. But the numbers are kind of just undeniable. And you see this in specialty. Lulu had it going on about 5 years ago, where they just looked like one of these things are not like the other type of numbers. I mean, this looked like software company type of margins. They're crushing. Zendaya is working for them. They're moving product. They're expanding into clothing, and they just are meticulous Swiss excellence. Stocks up 20% because after what we heard from Deckers, which turned in a fine quarter, a cromulent quarter, if you will, and the stock just got murderlated. And so kind of people were betting against On a little bit, but these were really undeniable results. They were up over 100% in Asia. America was slowing a little bit, but that's just because they're so good at it. But the real kicker here was the getting into apparel, and it wasn't clear that they were going to be able to do that well at all. And they did. And so I listened to the call. I enjoyed the call. I would encourage people to take advantage of this ramp. It's a perfectly good company. It's a tough time to be an expensive athleisure company these days. But, like I said, it's if you were looking for the consumer on the high end to be pulling back because these guys make really expensive products, I got bad news for you. They're going full price all Christmas. They have no intention to slow down. And I just bought a pair of hiking shoes that I like because I was sitting there during the call and I'm like, it's the hot moms can't be wrong. They must not be wrong. So I bought $240 hiking shoes for myself. That's a lot to spend for hiking shoes, but you know what? Damn it, I deserve it. I've been very, very good.
Been very good this year. On. Yeah, I mean, can I go back to that chart for a second? It's a conundrum, right? Because sometimes the chart just doesn't seem to match up with what the company.
You need all three of them. There's a reason you need all three of them. I always say that you want the technicals, the fundamentals, and the narrative to line up. And you got 2 out of 3 here. And man, that's just led to a misery pit for the stock. See those stars I put up on the graph there? There's 3 of them. Those are the 3 last quarters that they reported, all of which were huge beats. Guide higher, just delightful. The tariffs haven't hit them as hard as they thought. People were worried that maybe Nike was going to be stuffing the channel and that was going to show and really kind of weigh on the company a little bit. Nope, not even kinda. And so they took margins higher. They took pretty much everything that you'd want higher on the estimate side, and they're doing it smart. They're doing it very Swiss and meticulous and just precise. And it's fantastic. Unfortunately, they can't report earnings every single day. And so now, everyone's going to kind of forget about this in the next week or 2. And then we're going to start the hand wringing about, oh my gosh, I see fewer people doing, wearing On stuff and maybe their quarter is going to miss. Maybe this is when they miss. They're not going to miss, but it's kind of fully priced. And so it's just a headwind that works against the stock all the time.
We should note, obviously it's up huge today. It's up 17%, but it did open near the high of the day. It's actually traded down for most of the day. So
yeah, it's up 17% now. It's up 25% this morning. There's a reason I'm saying don't chase it, and I'm checking my enthusiasm because that's the hard-bitten voice of experience. I think I sold one of those stars, but it wasn't the one at the very top. And so, it's a good company. It's not like the next one we're going to talk about, which is one I'm kind of kicking myself in the butt for not owning a huge pile of. And that's Real, which is kind of in that, it used to be a company during the COVID era where this is just you buy used stuff, used fancy stuff, and it works in the K economy really quite beautifully. It's a place you can buy kind of vintage classic watches and things like that rich people just insist on buying no matter what the economy looks like, but slightly less ostentatious. And they hung around long enough to survive being a COVID bubble company and have really developed into something real. You combine that, and no pun intended, but you combine that with just an enormous short base and just 20% or something of the outstanding flow was short going into this call. And it was an absolute
20% short interest.
It was an online murder pit yesterday, baby. You could hear the squeals all throughout Wall Street of people that were betting against this stupid little gimmicky company that suddenly became a real boy, if you will, and just stuffed it right down their throats. It was a huge rally. It's been a monster, 300% or something for the last 12 months. And this is there's more than one company like this that kind of fits the same basic model, which is, no one believes. That's our theme for today. We just found it. We came full circle and found our theme for today, which is belief. This is the season of miracles. And so don't be gunning against all these companies as we head into the most important earnings week in the history of the planet in 5 days.
Well, I want to add that the Real is at almost exactly a 4-year high. It's been 4 years since the stock was at this level.
Right. And so when you go up 45% and that only takes you to a 4-year high as opposed to all time in history of the stock highs, that there's been some pain along the way. And so congrats to Real holders who held on. But that also tells you that, I don't know if people who owned it 4 years ago and have been underwater since are going to take this opportunity to exit. It's probably a decent chance to, it's kind of take your gains if you're long that from three. But so don't chase stocks that are up 35%. That's our sub message for the day is just relax, enjoy the quarters for what they are, and take it as a clue that maybe the consumer's not dead just yet. Doesn't mean the narrative has completely changed. It doesn't mean we're going to get just a absolute clean sweep when it comes to next week. But it does mean that those people looking for a recession are going to be disappointed again this year.
Okay, so next week, Home Depot, Target, Lowe's, TJX, Walmart, The Gap, and I would assume they're all going to be commenting. I would hope they would be commenting on like early returns for the holiday season. Is that right?
They're going to be commenting on that. They also are going to serve as every economic data report that we haven't gotten for the last 6 weeks because of the government shutdown. And so we haven't had jobs figures. We haven't had everything's been a survey or some group's guess or ADP's best estimate. We really haven't had any economic data that could go on. So we had a lot of fretting and a lot of politicians speaking into the mic. Next week, we got about 13% of the U.S. retail store base economy going to be reporting earnings all in 5 days. And so, when Walmart, I've always said, if you're going to take away all my economic data and just give me one thing to trade on, it's going to be Walmart's annual report, just because they're that huge and they basically are America at 1.5 billion in revenue a day and 2 million plus employees. They're going to give you a little smattering of AI will be in there. Remember the chat GPT stuff? They're also going to tell us how much cutting back on all those SNAP benefits really hurt the economy. Walmart is almost incidentally the largest grocer in America. And so there's a taste of everything kind of that you'd want to see from an earnings report. But we'll know much better how Christmas is lining up and by extension, what the next 4 or 5 months look like for this economy in terms of prices, in terms of the government cutbacks, in terms of our tariff woes, a grab bag, something for everyone all next week. And it's busy times. And so, it's a time when kind of economists and people that actually work for a living can come together and try to figure out what's going on.
So it's not just the case of we're getting a lot of big retailers reporting earnings next week, nor is it a case of we're getting a lot of big retailers reporting earnings in approaching the holiday season. Like next week would normally be a very important week, but because of the shutdown and the lack of data we've gotten from the government from the past month, this is going to essentially what you're saying here is this is going to be not just a big week for like retail oriented or consumer oriented investors like you, but just everybody, because it's going to be our biggest tell for the economy.
Right. I mean, you can listen to the University of Michigan poll, which is at lows lower than the great financial crisis in terms of consumer confidence, or you can listen to what Walmart's saying. Now, if someone asked my opinion on the economy, I would say we need to unshut down the government and get our, pardon my language, get our act together. I edited myself there just in the interest of the holiday. Yeah, I know it's this close to Christmas. I don't want Santa to hear me swear, but you know what? It's. I'm going to listen to Walmart if I want to hear about inflation. How is that affecting the economy? Well, I'm going to talk to the guys that sell $1 billion+ every single damn day. Yeah, something like 25% of the food stamp benefits run through Walmart grocery. They're going to give us more insight into what's going on economically and how the consumer's really being impacted by all these shenanigans going on in DC than anyone else. So it's not just a chance to trade them. It's not just a chance to whip them around. It's a chance to really check in and see if what the lasting impact on the economy is going to be. And so something for everyone. And then also you have Target, which God knows what they're going to do, but it'll be interesting.
It's going to be fun. Okay, yeah. So next week is a big week. I was hoping before we wrapped it up here, Jeff, actually two things. One, I want to mention that you last week, or not last week, last month, actually, you went shopping with Sean McLaughlin, and last week that video finally went live. I'll drop the link in the chat right now. But I was hoping you could kind of just tease that video for a second or give us the highlights. Essentially, the theme of the video was you and Sean, you teaching Sean how to shop like an investor. And I was hoping you could kind of give us a couple of tricks for the trade right now.
Yeah, absolutely. Sean and I went out and we bought him a nice outfit. we went to one of those companies reporting next week. Gap, we got Sean, if you can see, look at that. That's a fine looking Canadian tuxedo that he's got on there. All denim, head to toe, and he looks delightful. But also, the point of it was really not just to take him shopping and get him a nice outfit, but to see what I see when I go out to these stores. And I don't look at them the same way. I was raised in retail by an actual retailer. And that takes a lot of the fun out of it. It's like being raised by magicians. You know how the ball disappears, but you're looking for different stuff when you go to the show. When I walk in there, I'm looking to see not just my good looking friend and his nice outfit, but I want to see how well staffed that store is. I want to see if they're executing what they promised to do, which at the Gap is I want basics, in size, in stock, a good manager. I want an organized, helpful associates. And you got to continuously do this. You see all too often people go to a store once and they'll say, oh, that associate was mean to me, I'm going to short the stock. That's a stupid way to do it, Spencer. There's a running scorecard that you keep in your head every time you walk into a Target, every time you walk into your Ralph's, every time you walk into your store. And what you can see is which brands are executing. Where's the buzz in the store? Where's the energy? I want to see, it's a habit that you develop as you go shopping. Every time you go to a store, you set correct expectations. So don't go into Macy's expecting kind of super duper high level. I just want it clean, organized, in stock. And I want them, I'm grading every company accordingly. And so Target and Walmart are slightly different grades, but ultimately they're both big discounters. And when I go to those stores, I try to go to a different one every time. And I'm looking not just at how those stores are executing, but which brands within those stores are driving demand. Is the denim rally real? Let's see how in-stock Target is. Let's see how the jeans are selling through. Let's see what's going on with the real consumers. How are they behaving in the store? And are the stores doing a little more than the customers expect and living up to what they're going to promise when they're marketing themselves? A great example is Costco. You walk in, you're a Costco guy, right? I mean, it's you buy your membership, you go in there and you expect to pay cut rate prices on just kind of a random assortment of stuff. They deliver that every damn time. That stock hasn't been on fire, but the financials absolutely have been. And if you back up and look at it for the long term, it's been a tremendous bank money, just cash after cash. And that's because the experience at a Costco from one to the other is the exact same thing every single damn time. You get a $1.50 hot dog and you get a wild ass assortment of stuff at almost no profits within it. Well, that there's a reason. It's not a coincidence that Starbucks or Costco rather has been a 20% odd returner over the last 10 years. It's because they execute. It's because they deliver. That's what I'm looking for when I go into every single store.
Yeah, I've thought a lot about why I like going to Costco so much because I don't like shopping. I don't really like shopping for clothes, really, or for food. I don't like doing either of those things. And yet I love going to Costco. And one of, I think, the dirty little secrets about Costco is most of their like frozen foods, most of it kind of sucks. Okay, that's the thing. and yet I still enjoy going there and
because you walk by and they deliver what they promise, which is kind of, hey, look at that, $1,500. That seems like a good price for a Swedish sauna I can build myself.
Every time is going to be a little bit different. It's going to be the same, but it's going to be maybe different. A new treasure.
You know who else does something great like that? TJ Maxx. You look at that chart. We've talked about the company before. It's just nothing but an upward slope to the right. And they have the stated intent of every 10th hanger is going to have an irrationally low price. The CEO says as much. He says, we just wanted it every time. It's like a little treasure hunt for the people who go in there and buy apparel. Every 10th hanger that they pick up, it's going to just be this crazy wonder. Like, I can't believe I'm going to get this sweater for $8. Just holy crap. And that's kind of enough magic, enough dopamine to get the customer through. And once you run out of that magic, well, the story starts to fall apart a little bit. That's the difference between Target and TJ Maxx. And it's not just a thing that you can rant about. It's fun for me to go into stores and just kind of crap on them as I go through. That was the C word is not a violation of Santa's protocol on swearing at the holidays. But there's a difference between the magic that Target, that Costco and TJ Maxx are presenting every single day and where Target is now, which is a little lost. We go into it in the video. We contrast kind of our expectations with what the stores deliver. And I think we learned a little something. We bought a nice outfit.
Yeah. All right. So again, if you haven't seen the video, it's on YouTube. I did drop the link. If you're watching this video right now on YouTube, I dropped the link in the chat and description. If you're watching on Twitter, I just replied to the tweet of this video with the link to that video. And by the way, I should mention, anyone, if you're watching that video, that shopping video with Jeff and Sean, it's amazing. If you scroll down below that, you can get Jeff's free holiday retail guide, the 5 stocks he likes the most. You want to maybe give us one of those or a couple, or tease that for us a little bit?
Yeah, I want the folks to go in there and check it out for themselves. There's some surprises in there, but it's just names that again, these are companies that are a little better than expectations, and they're subject to change at any time. I think we talked about Best Buy in there a little bit. We got a little.
Yeah, Best Buy I think was one of the 5.
It's better than expectations. We just want to talk about companies that could kind of develop a little Christmas magic. And people have been shooting against it. Last week at this time, we had a pretty negative outlook. These are companies that are going to be just a taste of kind of the work out there that I'm seeing. And, you walk into a Best Buy now, and it's a fundamentally better experience than people would have thought. And that's the kind of magic that we're looking for. TJ Maxx, another company that, they're reporting next week. I expect great numbers out of them. It's what to look for. It's a little grab bag of companies that are kind of beaten down, companies that are forgotten, and also just some exceptional stories that continue to deliver over and over again. And that's what I like to see in a nice little buy and hold them type of portfolio.
All right, Jeff, last question before we go, just from the chat. Any thoughts on Decker from Double T?
Decker is kind of in that on cloud camp, and we liked him at 80, tried it, and then kind of talked about it in this space where it was time to take the trade. It's just a tough place to be right now with the 500-pound gorilla that you have in the form of Nike out there fighting for shelf space. They're gonna take a chunk, and shoes have been a disaster this year for that reason. Everyone's waiting for the $50 billion Nike to get off the deck and take some market share back in the form of shelf space from the Hokas. And so, that's what's ultimately going to kind of hit OnCloud, which is hitting lows of the days as we talk, is everyone gets real excited about the numbers. You look at Decker and it's like, oh my God, I'm getting this for 12 times earnings. This is incredible. Well, it's probably going to go to like 10 times earnings. And that's why is that, you have a slowing growth story. And so the technicals look like crap. The financials are starting to look good. Eventually, it'd be enough of a compelling value to get in there. But right now, it's a value trap because there's no reason to see why it's going to get better before it gets worse.
This Decker's was $223 at the start of the year.
And this is kind of a question of patience because you can look at this and people can be like, oh, the glass is half full. And you know what? Don't know about the guy who asked the question, but I'm not patient enough to sit around for 6 months and just whine like crazy about how my Deckers is ridiculously undervalued and this is crap and this is, it's unfair that we're at $80 a share when it should be 95. That's the same type of attitude. Look at Target. That was $250. They're pushing 90 right now. They report next week. There's not a Christmas miracle on earth that's going to get people back to 120 where it was about 6 months ago. And that's just because it's been an erosion of value and the story doesn't work. Deckers is a much better company. They've absolutely outperformed, but the truth is they're losing share to On. It's not quite as good as On at the very high end. Then Uggs aren't going to be enough to save the margin there. So, if you want to buy and hold it for the next 20 years, you'll probably be fine in Deck. If you want to actually make money in the next 6 months, you can probably look elsewhere.
Deckers is the third worst performing stock in the S&P 500 this year, only slightly worse than Lululemon.
You know what? And Deck hasn't really done, they haven't committed all those sins. I'll tell you one reason On's doing so well is because Lulu isn't. But, right. It hasn't really mattered in athleisure or shoes this year. On, even with the rally today, was still down 20% for the year to date. And I think Lulu's down, 50, 55, 60?
Year to date, Deck, you said On.
For the last year, I think.
Lulu's down 55, and On is, I don't know, I have to pull it up.
It's not going to be as pretty as you would expect. It's down about 20%, I believe.
Yeah, down 25%.
Yeah,
with today's candle. So.
With today's, yeah, exactly. With today's amazing results. And again, 3 quarters in a row, well, it's November, folks. And so that pretty much represents the entire year. That's one big full year of On kicking ass and the stock just murdering shareholders. That's an unfortunate combination. And that's not really kind of what we're in the business of doing. It's perfectly good company that is just fully valued and the story isn't lining up. You need the technicals, the fundamentals, and the narrative. 2 out of 3 doesn't get it done.
And yeah, for Floyd's Garage, the same is probably true for the consumer packaged goods companies. Those stocks are horrendous. They all look bad, right?
And maybe when we hear from Walmart, it's we might see something good, but the truth is, you're talking about really low margin companies that are facing margin pressure. That's just a brutal combination, and the consumer package companies are just on the bleeding edge of kind of what really hits it. Now, the benefits program, that'll be interesting because it might not matter by the time the CPG companies report. It's in 2 months or something. They've got a great excuse to guide lower and to say, you know what, things on the low end weren't that good because we cut off food stamps for freaking a month and a half. We didn't pay the army for 2 months, and that it turns out impacted some of how much those guys were spending. That is in fact going to leave a mark. Now, that's the stuff that bottoms are made of in the market, but then again, that's a long time from now. And in the meantime, it's just going to be kind of, just a crush. You see, if they miss and they're a nightmare, it's going to keep just working lower. And if they beat, you're going to get a little pop, and then you resume the negative story of margin compression and just sadness.
All right. You bring up a great point about the built-in excuse of the shutdown. I cannot wait to hear from these staples companies because they all have that excuse, like you said, and it's going to be a great lesson into the art of executive spin if the numbers are bad because
it really is. I mean, they're going to have it built, and you hear that from the airlines, you'll hear it from the hotels, you'll hear it from everybody. Sure. But next week, you're going to hear a lot of it again. Walmart is America, and so there's no way they got through this slowdown unscathed. It's just not possible for them to get through tariffs and a government shutdown without a mark having been left on them. We'll see how bad it is on Thursday.
We'll talk more about this next week. Once again, check out the video, Jeff, Shop Like an Investor. The link is in the chat, in the description. Get Jeff's free report, his 5 favorite retail or consumer stocks for the holiday season. And we'll see you next week.
Take it easy, folks. Be brave out there.